Welcome to the show, Mohan sir.
Thank you, Shruti.
Mr. Mohan Krishnan has been our management guide and management guru, I would say. Welcome to our podcast on smart wealth, how the smart grow their money. This is Shruti SURAKSH for Sahasra Property Capital. Welcome to today's episode, where we dive into one of the oldest yet most powerful truths in wealth creation: land, growth, wealth. In a world of volatile markets and digital distractions, land continues to stand as a timeless, tangible asset that builds real generational wealth. Whether it's through strategic investment, development, or holding land in high potential zones, the path from soil to success is clearer than ever for those who understand it. Today, we'll unpack why land remains one of the smartest investments, how to spot real opportunities, and what today's investors need to know to turn land into lasting legacy. The topic for our day is land growth wealth. Mr. Mohan Krishnan is a senior IIT and IIM alumni. Over 20 years of work experience in FMCG and MNCs like Unilever SmithKline, General Foods Singapore, and MAA Buzel, followed by 25 years of independent management consulting. His clients include SAP India, Germany, plus UiPath Robotic Process Automation, Saskin, Madura Garments, Eureka Forbes, Titan Limited, Airtel, 3M India, Silver Software, India and UK, Renault, Nissan Global, etc. He is a keen golfer, has been an honorary chairman of one of the largest NGOs in Bangalore, Vatsala. He has been on the managing committee of KGA and has taught a few courses at IIM Bangalore. Generally a risk taker, trying to enjoy life and the people he works with. He's only becoming wiser now. We will be talking about how land is equal to growth is equal to wealth. Is real estate a viable investment option? Can it provide assured, healthy returns in a fixed period of time? Does it offer the security other forms of investing have? Will my money be safe? Let's find out in this session. So, take us through your life's journey so far.
Wow, that's a big question. Uh, I think we are from a middle class family. In fact, you can say middle of the middle class. My father, he worked in one company for almost all his life. Uh, we didn't have much. As kids, we never really understood the sacrifices that our parents did. I think most parents do it anyway. But much later, I realized that although they didn't particularly leave me with anything like wealth or property, not particularly, they did teach me a lot of things.
Right.
Uh, and that I am very grateful. They gave me a good education. I think more important than that is that they did not give me a single piece of debt. I had no loans to pay when I finished. And that today I think is an extremely important
Absolutely.
aspect for children as they graduate. So I'll always be grateful for that. I went to IIT when I was very young. I mean, I don't know how. I was 15 and a half when I went to IIT.
Oh, okay.
Then we finished 5 years. I had some good friends. And again, people don't understand the value of friends. There are people, you've heard about IIT, there are people who are so tensed up that they commit suicide. These are many cases that happen
There's a lot
now.
of pressure on that.
Oh, no pressure, exactly. And there are others who don't care and work their way through, drugs and other things and so on and so forth. And the only thing that stops you at that point is your friends. I had a good set of very balanced friends. Sure, we studied, we had to, but we had a lot of fun.
That's
I think that's very important.
Yeah.
And that continued through my IIM journey, through my working experience, through my consulting experiences. And it is where I am today, I think, thanks to my parents, thanks to my friends, thanks to some very good clients also. And it has changed me, made me what I am.
That's nice. That's really many. I would say tens of years, if you put it that way. So we would have a very wise and good insight on today's topic from you.
I sure hope so. I sure hope so.
Right, sir. When did you first feel the need to build your wealth?
Wow, again, you're taking me back a long, I don't even remember. Um, whe- Even today, I think it's true. When you are about in your 20s, I think people don't think about building wealth. when you hit the mid 30s, that's when you start saying, okay, I need to do something. I can't continue the same way. And it was similar for me. I think somewhere around mid 30s, I started to say I had to do some investments. I had to make some growth of money, capital, because I got nothing. So I had to build it up myself.
So it was first generational wealth.
Correct. I
Right.
mean, that's the technical word, first generation wealth, yes. So I took a few punts. Like I think I bought Reliance in 1998, 97.
Very interesting.
Trying
At
to
what
remember.
price, if you could remember?
I am trying to remember. I think the offer price was 10 rupees. I don't know
Oh,
what I
wow.
bought it at. I think I bought about 50 shares or something. I don't remember. I don't really
Right.
don't remember. And after some time, the shares went up. So that was my, I'm not talking about long term. I'm talking about 2 years or something like that.
Yeah.
And that was my first exposure to saying, oh, this can work. This seems to be interesting.
So we would like to talk about what legacy wealth assets were you given or that you started out with?
Nothing.
Like the
Honestly,
hold all.
like a hold
Hold
all,
all.
like a trunk, a hold all. Yeah, I mean, no, but I said, remember, my father was a middle of the middle class. So it was good that I had no debt. I think that's a big legacy.
Right.
I can never forget that. It's good that he put me through an education. And those were different times. I mean, I used to go to the bank and withdraw 30 rupees for my monthly expenses in IIT. And so it's a different times altogether.
So even if it was different times, I think what holds true even in today's current scenario is that not to leave your children with debt.
That's true. That's a big favor.
Yeah.
Not to leave your children with debt, not to make sure they're well educated. And in many ways, they taught me some values that they didn't teach me. It was the way they were. It was the way I understood. And
That
those
was
are
the way
still,
of life.
that's
I
the way
mean,
of life.
Yeah.
And so, for example, and that still stays with me today, money is not the end all of things.
Right.
Money is useful up to a point. Relationships matter
Right.
because they're the ones. See, my father used to commonly say, I think it is there in one of the slokas, you came in with nothing, you'll go with nothing.
Yeah.
And you're just looking at things for the next generation and handing it on to them. I think it's very, very perspective giving. So that was the second point. Money is not everything, relationships matter. And the third thing was, listen, get used to hard work. There's no avoiding it.
Right.
But don't take stress. So those things still stay with me.
Like
You
one
know,
step at
I'm-
a time and focus.
Absolutely stay with me.
Yeah.
It's useful. And
Yeah.
so they didn't leave me with legacies, but what they left me with, I am very grateful.
Right. It's something that you can't put a price upon.
I can't. I just can't.
But from there, you have built so much, and IIT IIM is something that today everybody wants to be there, and you've been there in its initial journey, so that's fantastic.
I don't know. I like to say it was easier in those times.
I
Shruti.
don't think so, sir.
I don't think we had. Today you have, I think,
The
4 lakh,
competition
5
is
lakh
higher.
people
Yeah, yeah.
entering. I don't think we had more than 1 lakh entering when I was there. And in fact, in the town we were, Asansol,
That's near Calcutta.
it's near small town,
Okay.
typical small town, 3 or 4 major schools.
Right.
And I think there were no more than 5 people who entered IIT.
Okay.
So it's that small a town. So
Right.
it was simple. Life was a lot simple. Yeah.
I'm sure you're being very modest here. But let's move on to our next question. How did you start building wealth? Like, what were your initial problems that you faced once you got off IIM and IIT and IIM?
So the first 5-10 years was like, forget about wealth, let's enjoy, So I did a lot of traveling. That was fun. I changed jobs. That was fun. But somewhere, as I said, in your mid 30s, you start saying, okay, listen, we need to save something. And as I said, I picked up some Reliance shares early enough.
Right.
That was a good understanding for me that you can build wealth.
What kind of assets generated the best returns for you?
Again, it's a mixture, Shruti. Certainly, stocks and shares did, even
Okay.
from my
Right.
early investment days.
Yes.
They continued to do well. There have been downturns. I can talk about that later. Land has been a mixed kind of thing. There's one investment I made in land which was fantastic, which in fact actually helped me to come to the residence I am right now. I picked up a small, very small plot in Whitefield. I'm trying to remember the date, in 1997, 95, and I picked it up for 50 rupees a square foot.
Okay.
And I just sat on it for 5, 10 years. And as I said, I sold it at maybe 1200, or maybe not, maybe 1000 rupees a square foot. And if I'd waited for 6 months more, it would have gone up to 1400. But that's the way it is. That that gain, plus I picked up a small flat in Natasha Golfview Apartments. That also I sold. Those two put me onto a larger apartment where I am today. So that was a good investment. But at the same time, I also later on picked up a piece of land, two pieces of land, which were absolutely disastrous. I'm not saying they're written off. Right now, I still have them. I'm hoping that they come back and give me a yield, but they were pretty much bad investments. So it's a kind of a mixed bag. Really.
So you've got good experiences, and that was something that fueled your residence.
Yes,
And
that is
some bad
correct.
investments.
That
post
is correct. That is correct. Yeah.
It's a mixed experience in real estate, right? So your views on land as a wealth builder. So that showcased in the residence that you bought. So would you choose land to balance your portfolio, because you spoke of stocks as well as now we're speaking of land investments?
I would. You got to remember something, Shruti. Your investment pattern depends on the stage of life you are at.
Right.
So when you're young, I think all of us would go through a little more aggressive investments. You'll put
Correct.
it into shares. You'll put it into some ventures. You know,
Yeah, the risks are different. Yeah.
because you got time to catch up. You got time
Right.
to recover. As you grow older, those things will change. You say, look, I don't have too much. I can't. How much can I risk? Becomes an issue, and so those things change. But land, to my mind, I would do it. I strongly believe, if you look at, we've discussed this earlier. If you look at some of our leaders, you will see that more than 50% of their investment is in land.
Right.
More than 50% of their wealth is in land. Now, I don't think people of my, my position put in 50% of their investment in land, probably 15%, 20%. I think we're missing something here. But having said that, land in Bangalore is a definite growth asset.
Right.
Bangalore is growing well. Land is very important. 100% it is a growth asset. However, and land is a fantastic balancing item. Stocks are volatile. Stocks can go up, stocks can go down.
But
land is solid.
Yeah,
Land
it's
is
growing
solid.
always,
It's
especially
growing.
in
Exactly. I'm not.
our country.
I think very rare that land has dropped value. Very rare. I haven't seen one. It's always gone up. So there are other issues, of course. I mean, liquidity is not easy with land. You can't port that asset. It's not mobile. There are issues with land. So given the stage of your life, I would say my position right now, land is a very good wealth builder. No question about it.
That's nice. What were some of the specific actions that you took that really boosted your wealth? This is in your opinion. You can tell me what your perspective
Okay,
is.
again, a good question. But 2, 3 things I think in retrospect. One is I got an investment advisor.
Right.
I think not because I couldn't do it, because I didn't have the time and energy to do it. There were many more options. There were many more stocks and shares. There were many more other schemes, including gold traded funds and
ETFs, yeah.
ETFs, and you can't keep up with those things. So you needed somebody who would look at it objectively and tell you certain things. So that was one, I think, in my mind, a good decision. And I would urge people to look at it if you don't have the time to look at it carefully. I would
Yeah,
urge
wealth
that.
advisory is important, sir, because they are doing it 24/7. That's their job, and we are doing something else. So you can't sleep a night when your money is at stake somewhere
Absolutely,
else. Yeah.
absolutely. So that is one important point. The second one, and I'd like to share that again. Second one is you need to leverage your investments. A lot of us, let me say, I'm talking about, let's say you put an FD in a bank, and it gives you a certain percentage of return. Most of us will keep that percentage into our savings account.
Right.
But very few of us will say, if I'm getting this much per month, why can't I reinvest it in an SIP and get a little more?
Yeah.
If I don't need the money, if I need the money, okay, you can use the money. But many of us just keep it in the savings account. Rotate it, leverage it a little more, put it into another SIP, build something more. So that's the second lesson I learned.
Flipping investments and
It's
making
leveraging. Flipping is,
leveraging.
in my mind,
Yeah.
when you get rid of something and use
Yeah.
it. So
Right.
here I would say flipping is a good point. Like my real estate was a lot of flips.
Right.
I picked up one piece, I sold it, made
Yeah.
a gain on it. I picked up another piece, I sold it, made a gain on it. I picked up a third piece, and really nice.
Yeah.
I can still flip it, but as you grow older, you become comfortable. Then you say, look, I am not going to look for a bigger, posher, larger house. I'm very
Yeah.
comfortable right now.
Yeah.
So there is a flip. So that's the second point. Leverage, flip. The third point is that don't be sentimental. I mean, I know my father. I'm taking a lesson from him. He had a house. He stayed in it for the rest of his life. He built a house. He
Right.
stayed in the rest of his life. I think a lot of us do it, but I think it's a mistake. At some point, if you can leverage it, flip it, grow on top of it, I think we should do it. So
Why
don't
not?
get sentimental about things. Yeah.
Being attached to your
Being
assets.
attached to your
Yeah.
even shares. I mean, a lot of people will say, I picked up Reliance and I was there for a long and it's going very well. But at some point, you have to decide that you can leverage something better.
Right.
Flip it. Don't get sentimental. So that was another lesson that I learned. So maybe these are the 3-4 things that really helped me.
Those are nice pointers, sir. Yes. Could you suggest 3 important pointers that you'd like to share with our viewers about building wealth?
Similar to what I have just discussed with
Yeah.
you, one would be spread it across a couple of assets.
Right.
Stocks and shares alone will not do. FDs alone will not do. Again, it depends on the stage of life. As you grow older, you may not look at certain assets. When you're younger, you can look at certain assets. So that's one important thing. Diversification, I think, is very, very important. Second is that don't be short term about it. And that's something I think a lot of youngsters have to learn. Don't be short term about it. You pick up a share, the share loses value. A lot of youngsters I know will let's just get rid of it. But you know what? If a share has lost value, you picked it up because the share was, in your opinion, a good value, a good stock to buy. What has changed? Has it come down because of some fundamentals or has it come down because of market movements? Many times it comes down because of market movements. Don't sell the share.
Don't be under the
Hold on
influence.
to it.
Yeah.
If you can, buy some new shares because the fundamentals are there. Buy some, pick up some new lots.
Yeah.
So you average your price down and then the principles you started with are worth it.
Correct.
10 years from today, they would be really worth it. Remember, India is a growing economy. Never forget that. So 10, 15, 20 years from today, shares, land will do phenomenally well.
Yeah.
Stay consistent. Don't go temporary up, temporary down, get rid of it, buy something else. That's a mistake. Any strategy is good if you're consistently doing it.
Correct.
Not if you're temporarily trying something, flip your strategy. I'm reminded of a person who wants to dig for oil. Now, he goes into his backyard, he digs 10 feet, doesn't find oil. Then he moves another corner, digs 10 feet, doesn't find oil.
Right.
He moves to another corner, digs 10 feet, doesn't find oil. Whereas all he had to do was to dig maybe
Deeper.
1,000 feet, 2,000 feet, 5,000 feet down in one spot. So sometimes that's a lesson that we all need to know. So those are some of the things that I can think of.
That's a very important lesson. I think if you have done your research before picking up a particular asset or a stock or land, then if that is good credentials for you to stick with your decision and stay on it, be patient.
Absolutely right. Absolutely right.
So, what kind of risks that you took when you were building your wealth?
The risks.
I know it comes with different stages of life, the risk-taking ability. But when you were building your wealth, did your family say no, this is too risky, don't do it, or did you still say no? I think I know what I'm doing in this. I know my research. It's a gut feeling, and I'm going to go ahead.
Very good question. A lot of stuff that I've done, I've discussed with my spouse, Leela.
Nice.
And she's given me a balanced perspective. It's useful. When I was younger, I would do pretty much what I wanted. Now I'm realizing the value of that independent perspective. But I think more than the risk in wealth, when I look back, the biggest risk I took was to not do a corporate job.
Okay.
I went independent consulting 25 years back. That's a big risk.
Right.
And that is one risk that even Leela supported. She said, look, just do it because you want to do it. Just do it. And
And
it
I suppose you had the comfort of a good job opportunity and
plenty of job opportunity.
yeah,
In
of
fact, the
course.
first assignment I did as a consultant, I was offered a job opportunity.
Okay.
And no, I continued with it. And
You chose
that was the
business.
bigger risk than any of the wealth journeys I've attached. Maybe in retrospect, I could have been a little more wealthier if I'd stuck to a corporate job. But would I have been happy?
The
Would I have been as
satisfaction of your
healthy?
own.
These are the
Yeah.
balances you take.
Right. So you're happy about the decision
Oh,
that you took
perfectly all
that.
right. Perfectly happy.
And you've done phenomenally well. So
I've
that's
done well. I wouldn't say for now. I've done
of
very
course.
well. Okay.
So are you partial to any specific assets or investment opportunities?
Again, a good question. I haven't thought about it. But see, the problem with being partial is that some of these assets are slightly cumbersome to enter and exit.
Okay.
That's the only reason for partiality. Because if I'm partial to a share, I know I can enter and exit quickly. I like land in some ways, but I know that
But land is illiquid.
land is illiquid. So that is really my partiality that comes up, not really because of any analytical or financial requirement.
Today, but land with SPVs like AIF, SM REITs. So it is easier to exit when you come to such a forum, but not many of them know about it
That's correct.
if they have not had earlier investments in land.
That's correct. I had a very good experience with an SM REIT. I think I must have made in 3 years something like 40%, 50% return, which is very
Fantastic.
good.
Yeah.
But as you rightly said, to know which one, to know which project requires a fair bit of involvement. Maybe I was lucky. I'm not going to complain. I'm not going to say that I was brilliant. It just happened.
Yeah.
But still, as you know, that's the problem that gets me partial or not partial. I am not partial to fixed deposits. I don't particularly like fixed deposits. I don't particularly like putting money and waiting for interest for the 3-4 years.
Yeah.
But my advisor now says, "Sir, you're getting senior. You
Little
need
bit
to
of
park it
security."
in security. I won't allow you to experiment."
Right.
Okay, fair enough. He's got a point.
Yeah.
That's what I paid him for.
Correct. How would you review your wealth portfolio?
Because I wouldn't. But because I have an investment advisor,
Right.
he makes it a good discipline to review it every now and then.
So they rebalance it if
They
required.
rebalance it. We make changes. I argue a little bit. I give him some other suggestions. So it's a good, healthy relationship. We do review it a little bit.
Right.
But I think the problem, the question that you asked actually triggered me on the land. I think in the land area, I have not done that review.
Right.
And I think that we all need to do it because I often find that when you pick up land, and it happened to me.
Yeah.
You pick up land, you let it be for 10 years, then you go back and find, oh my God, it's not done well. But what have you done to track it? What have you done to follow up? What have you done to check it? If you don't do that with land, I think you are asking for trouble. So that's the other bit of learning that I can say. That review is important, and that review cannot happen on documentation. You have to go to see the site, see what's happening around it.
It's a physical property.
It's a physical property.
You
Absolutely
need to check
correct.
on it.
Yes.
The possession,
Possession.
especially you have so many squatters today.
Yes, and see who are the other people who are building on it. That
Yeah.
gives you a very good perspective, a
Yeah.
perspective you won't get anywhere else.
Especially land, you compound it.
That's correct.
Make sure you have a
correct.
security and
That's
some
correct.
security cameras today. So
Absolutely right. Yeah,
you need to have possession of your land if you also having it registered in your name,
That's
so
right.
that all
That's
those
right.
tiny things matter to secure your land. That's right. So at this stage in your life journey, what next would you like to do with your wealth portfolio?
Being what it is, I think maintenance would be an important aspect. In fact, let me put it two ways. I'm at the point where I can fully retire or not fully retire. I'm trying to postpone the retirement as much as I can for my own mental, emotional, physical well being, not really for wealth building. But the other point of it is valid, which is the longer I do some interesting work and I enjoy it, the longer I have to let my wealth regenerate itself. So that aspect is interesting. So it's not just maintenance, it allows that wealth portfolio to grow
Okay.
because I'm not dipping into it.
Right.
But it's a question of maybe a few years. Let's see what happens. And I think maintenance is going to be an important area. Growth is useful. But as long as I can enjoy myself, let's see how long that wealth portfolio wealth portfolio I take to dip into.
Right. So you have a daughter as your only child, and she lives out of the country, right, in Canada.
That's right.
So, what are your thoughts on passing on to the next generation?
I know she'll get something.
Yeah.
Unlike me, I know she'll get something.
No, but what are
But
the nuances? Like, she doesn't. Is she going to come back to India? What is? Do you have a conversation with her? Is it an
we
open
do, we
conversation?
do. Daughter is currently okay. She's reasonably, touch wood,
Yeah.
reasonably settled.
Yeah.
She doesn't want to ask us for anything. But the point is that I know that she probably will not come back. But
Okay.
she's not going to use land that I have. It's too inconvenient. I think the generation today is wanting more mobile assets. They want to be, for example, can she sell the land sitting in Canada digitally? She can't. I can't see her come down, talk to an agent, go to the registrar, register this in her name,
Yeah.
transfer it to somebody else, take
Yeah.
pictures. I can't see her doing this. So there has to be a transfer. Probably the transfer will be more digital these days than
Yes.
physical. And I think if land can also move towards that, it will probably bring in a lot more of the
Yeah.
youngsters into it. But I can't see. I think she will probably take the money, invest it her way,
Yeah.
maybe even start a business. But that's second generation
Yes.
concerns.
Yes. So that is definitely a difference in how you started off,
Yes,
and
absolutely.
now what your daughter will be doing is generational wealth management. Firstly, to start with, what do I do with that kind of money I've got?
Absolutely. Absolutely. She's in finance,
Yes,
but I tell her you're a very poor financial person, but
and
that's
she's doing
okay.
phenomenally
She's
well
doing well. She's
herself.
doing well.
So
Yes.
that's great. So here we are. The idea of earning through land without owning the property wholly or living or working on it is not new to us. It's generational. It's as old as both the real estate and financial management professions themselves, to buy and then sell at a profit. That's what Sahasra does, quite simply, for investors who wish to grow their wealth in a way that is professional, legitimate, and hassle free. We have a solution at Sahasra, sir. So you need not go through the hassles of owning it, finding where your piece of land is and then moving it to your next generation. But we have a means that you can use which will be much more lucrative for the next generation to come in.
I certainly think that this is useful.
Yeah,
I think certainly the next generation will find it even more useful. You're talking about solving documentation, legalities,
absolutely.
taking care of security. I think the next generation find it extremely useful. Maybe even the in between generation who are working on land, I'm sure they'll find it useful.
So, an easier exit option is something everybody wants. Because today the world is moving so fast, and there could be an opportunity where you want to invest this kind of money elsewhere. So, we're saying yes, at Sahasra, you can come in, and there will be a certain fixed period you will be with us, but the exit option is going to be easy for you.
I think it's a good idea. If you
Yeah.
can do this well, great idea.
So, land has always been a great financial asset class, not only for diversification of an investment portfolio. It lessens dependence on macro markets, which are often volatile and beyond one's control. It requires less effort and appreciates naturally over time. So, you also mentioned that you bought something at 50 rupees in Whitefield, and the appreciation is some percentage that I cannot calculate mentally right now. So, you have sold it at 1,000 plus rupees per square feet. And today it's a huge number that we're talking about. That's what we're seeing, that appreciation from land is definitely something that we can't put a number on with the growth that we're seeing in Bangalore today. Real estate as an industry is growing. So, would you like to make your investments in it? Maybe cash in, cash out, not really owning the piece of land for your self use. What do you think of this investment
I think I
style?
would. The question is, I have to convince my advisor. He's sort of holding this hammer over me, saying, "No, sir, I will not allow you to take any risks." But I think I would.
Okay.
It's a question of when and the right timing for me.
Mm.
You know, we are at a point where we could think of a retirement home,
Mhm.
so that could be a good reason for picking up some land or picking up some other property. We are at a point where our current asset is very well valued. So it can make a lot of sense.
Right.
But we're comfortable. So the
Yeah.
question is now, I think everybody will go through this. Question is,
Yes.
do we give up where we are, comfort, the people around we know, the location is fantastic, and move to a smaller retirement home? When do we do it?
Hmm.
I think each one of us has to have their own workings on that.
Right. And if you're moving to a senior living space, I think you need a couple of friends to move along with you.
That's correct. That's correct. That's absolutely correct. Nothing like, yeah, bringing a couple of friends along.
Yeah. Which brings us to the concerns that investors typically face, particularly with land. Well, we're aware of some of the concerns we've had from our investors. So, why choose Sahasra? At Sahasra, we understand the concerns of first time land investors. So, you've had some experience earlier, but to the first time investors who, they are very happy, like you said, in your own phase of life, you're happy to be where you are and you would look at land investments. But now we have people who have dwelled in the IT industry or as doctors and have not found time to see that land is an opportunity for their investments to grow wealth. So for them, we have a couple of directives at Sahasra that I would like to bring here. Asset protection. So, investors receive a share of the partnership with full title to the allocated land. This share can be held, sold in the open market, or encashed as per Sahasra's lock in period. We're looking at a lock in period of 2 to 3 years at a committed premium of 50%. So, we are very clear on this, and this will help exit at a good percentage on ROI, as well as your lock in period is not that long because land means that you're locked in for that longer period of 10 years, like yourself you mentioned with your journey. Here we're looking at something 2 to 3 years as a lock in period. Our other important thing that we would like to say is we believe in clean land. So, with full due diligence, we resolve legacy issues, obtain clearances, and deliver land free of ownership issues and claims, ensuring clear title deeds and legal contracts that satisfy us 100%, even before we allow investors to step in. Would you be satisfied to see clear titles that the advocates have signed off on?
Well, absolutely. There's no question about it. I think the scheme that you mentioned is quite interesting.
Because
Quite,
that is something that
yeah.
irritates people
Correct.
by saying I put my investments in this particular land and today somebody comes up after a year after my ownership and says my
Claims, yeah.
great grandfather had it and this is a part of my land and so on. So
No,
have
so-
you faced such issues earlier?
Fortunately, not. But
Okay.
see, both of them translate into a lot of hassles. So I'm not faced like somebody else claiming it or a squatter issue, but I have faced issues of no promised development. So the guy who promised it and gave me a very attractive price has not developed it at all. It's so bad that I can't even locate my own plot today.
So I think that's
So
very
those are
so
issues I've faced.
well said because I feel if you pick up a piece of land, you need to work on it.
Correct.
And either you own it or you sell it or you build, but you need to give it a certain shape
Correct.
and that will leverage its
Correct.
worth. At Sahasra, we believe in transparency and credibility. Run by industry professionals well versed in finance, real estate, and regulatory frameworks, we are committed to transparency and fairness. So, here we believe in communicating with our customers and clients. So, we keep them through our journey of development from the time they come in as investors or partners in our land stage. So, we acquire land and then through how the development happens, whether it's plotted development or villas, we take our investors along with us. So, we'd like to share everything transparently. Does that give you enough security
Oh
and
yes.
confidence?
Oh yes. In fact, all too often, if there's a problem, many other people don't even talk about it. They prefer to hide it. If you're transparent and you want to make that a virtue, I think it's very positive.
So
If
we'd
you have
like
a
to do
problem,
it
tell me I have a
regularly, yeah.
problem. So tell me it's going to take me this much of time. I'm sorry, but this is not something we could have planned, and this is the way it is. I think I would appreciate that kind of openness. So I
Yeah.
think it's good.
Keeping our customers informed is something that we want to do because they have invested with us with a goodwill, and we have a responsibility to take them through our journey.
Agreed. Completely agree.
Guaranteed returns. At Sahasra, investors can be rest assured that they will receive their capital and returns as agreed upon paper. Each property is structured for the returns based on the nature of the project. So, in the beginning itself, we tell our customers that this is the assured return that you can expect. And if anything at all, because land is on a growth trajectory, whatever you make on the upside is completely theirs. Does that excite you to come into our
Yes, I mean it's
investments?
quite open. I mean, land is a growth asset,
Yeah.
and if you can assure of that return, and if you can protect that assurance,
Yes.
or give some concrete, shape to that assurance, fantastic.
So, for one that it's always going to grow, that you just said, that itself is quite some assurance that, yes, you will be getting a good return at the end of the fixed period.
Yes.
In case of an emergency liquidity, investors can quickly access their capital. While all this is included in the agreement, it is integral to our working system and approach. There are times when people may have different scenarios and phases in their life that they're unexpecting. So, when such scenarios do appear, we do allow and accommodate emergency liquidation with the customers. I think that's very important because this is a capital intensive um, project, and if you are putting so much money and you have a requirement for it which was unseen and unexpected, at that time we definitely do accommodate because ultimately we are all human, and I think that's an important
I
factor.
wish my other developer had offered me such an emergency liquidity, because
It
he
does
just
come at a
yes.
cost, sir. It's
I
not
understand that,
yeah, the
but
management costs,
I'm
but you
otherwise at this point in time I'm at the risk of losing the entire investment. So
absolutely
the
right.
cost, so there was supposed to be an appreciation. I'm prepared to obviously tone down that appreciation. I don't want to risk losing the investment.
Correct.
So I think that if you are able to do that kind of emergency liquidity, I think it's a very good move.
Yes, it will come at a cost, like I said, but that is it's not right
Mhm.
on our part to say that it's zero. It's not zero.
Right.
Right. At Sahasra, we have an equation which says land is equal to growth is equal to wealth. What is your take on this?
I think it's a very powerful statement. Um, Anything that you need to do for growing a country, growing an economy, requires land. We know that. You want to build a school, you want to build a airport, you want to build a bus station, you want to build a hospital, you want to build a Vedant Sauda, you'll need land. So there's no question that growth requires land, one way or the other. The other part of it is also equally important, which is that if growth takes place, then the asset that you have by way of land gets in demand, and that creates appreciation and therefore wealth. So I think it's a very powerful line. Land equals growth is to equals wealth is absolutely correct.
Thank you, sir. Furthermore, we offer as a principle full disclosures, status updates, and a solid relationship with investors. Lastly, proven track record. Our work and successful delivery in land acquisition, aggregation, and development is well established. As of date, many investors have already trusted Sahasra with their investments. We will welcome more of you to come into our Sahasra investors community. Thank you. Thank you, Mohan sir, for coming to our
Hi.
podcast.
My pleasure, Shruti. Nice of you to have me.
Thank you for making time. We had some wonderful insights on land, growth, wealth. This is for Smart Wealth, how the smart grow their money. This is Shruti SURAKSH signing off for Sahasra Property Capital. Stay tuned for our next episodes.